Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. With all of that said, let's jump over to our first chart. And I've got the S&P 500 here on the screen. And we have another new all-time high on Thursday. But what is interesting with this is where a lot of this strength has been coming from. I'm going to talk about that a bit more in a moment. But first, just assessing this chart as it stands. So despite all the nervousness and the disbelief which still exists in some camps, this remains a bullish trend. We have rising 50 and 100-day moving averages. They continue to move higher, and price is above those moving averages. So that, by definition, is an uptrend. There's often a temptation to look for tops in these situations, but more often than not, the best course of action is to actually resist the urge to outsmart the market and simply go with what is a rising trend. When we look back at the data over decades, 52-week highs, which is what we have at the moment, it's an all-time high, it's also a 52-week high. 52-week highs tend to lead to further strength. Maybe not tomorrow, maybe not next week or even next month, but trends are powerful forces and really they can last a lot longer than a lot of people anticipate. The same applies when we look at the S&P 500 on an equal weighted basis. So this is, of course, the S&P 500 capitalization index, which is market weighted, and this is the equal weight, the S&P 500 equal weight. It's actually an ETF. And when we look at this, we've got a series of all-time highs throughout this year. There's several of them. Temporary pauses in between, and this is always going to be the case when you have rising markets. You have temporary pauses along the way. And when we look at this, when we look at the overall structure, there's nothing here to suggest that this pattern of higher highs and temporary pauses is nearing an end. It's not to say it won't end, but we don't have any signs of that at the moment. I think a key detail that the new highs in the equal weight is telling us is that this is a broad-based rally. And that's important because healthy bull markets have wide participation. They're not dominated by a narrow group of stocks. And it's interesting to see what's not driving, or what's not a key driver of this latest rally. And that is the FANG stocks. So this is a lot of those big cap technology focused companies. These remain in an uptrend. There is still an uptrend clearly in place. We have rising moving averages, prices above the moving averages, but the FANGs are yet to make new all-time highs, unlike many other segments of the market. So they're not the dominant force that's been behind the most recent rally in the market. And this tells us that the overall market strength is not just about AI, it's not just about technology, which again suggests that this is a broader based bull market. And you can actually see this playing out in what many people consider an old-fashioned index, which a lot of people focus on the S&P 500 and they don't look at the Dow so much. But the Dow is showing us where a lot of the recent strength has been. And the Dow, of course, is a collection of big companies across a range of industries which really form up the economy. I think the Dow has the best chart structure of all the US indices at this point in time. And what you can see, it's got this nicely formed series of rising lows. And of course, that's accompanied by higher highs. And it's also got those rising moving averages of 50 and the 100-day moving averages have been rising steadily since back here a year ago, back since November last year. And and price, of course, is still above those moving averages. So this is what a bull market is all about: rising averages, price above those averages. I've got one more chart to show you. I think this is an emerging opportunity. I think this is worth having a look at. But first of all, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It tells YouTube you're watching. YouTube shows other people. Helps me a lot. Please do those things. Hit that subscribe button if you haven't already done so. Now, just to round this off, I've got two charts which I think are pretty interesting. First of all, the Russell 2000, which is of course the small caps index. And what I think is interesting here is that the small caps are in the process of gaining momentum. So last week I spoke about this corrective looking pullback that we'd seen back to the 50-day moving average. And this has all been part of a larger sideways period, which has been playing out since July high. And now we've got this strong rally. We've got this strong rally off the moving averages. I think the strength of this rally, in contrast to this choppy this choppy overlapping drift back towards the moving averages, in contrast to that, I think this strong rally indicates the path of least resistance is higher. And you can see all the pullbacks this year, throughout the year, all the pullbacks have generally come back to these rising moving averages. Yes, there's been a bit of overshoot, but generally speaking, these moving averages have held the pullbacks. And that's typically a sign of accumulation, buying the dip. I think the odds favor an ongoing move is underway that can, I think that can take the market back towards back to and beyond the November 2021 high. It's also interesting to look at an indicator, and this is showing the percentage of Russell 2000. This is actually Russell 3000 stocks. It's showing the percentage of stocks above their 100-day moving average. And you can just look at how this has been increasing over the last few months. It's currently at 70% of stocks above their 100-day moving average, up from around 60% a week or two ago. And just looking at the structure of these rising lows and how it's been capped at around 70%, I think it's on the verge of a breakthrough through this 70% region up towards 80. And if we see a rising percentage of stocks above their 100-day moving average, I think that's going to be a positive thing, which flows through to stocks generally. So I think this is worth giving some consideration to, particularly these Russell 2000 small cap stocks. So I think we will call that a wrap for this week. Hopefully that's been interesting. Hopefully you get some ideas from that. I look forward to coming back, talking to you again next year. Until then, bye for now.